Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at a popular tech stock. It's the PayPal chart, and we take a look at the chart from an Elliott wave point of view. So we'll take a look at a sentiment-based analysis. We'll take a look at the price chart and to understand the current trend, reversal points, targets, and much more. So let's go. We are currently on our website, dailymarketupdate.com. You can register here completely for free, as you probably know. The link is in the description and you can get access to all of these Elliott wave updates that you can see here, the different categories, cryptocurrencies, our US stocks and the tech stocks and the S&P 500. Today, though, we want to take a look at the tech stocks section. And by the way, while I'm navigating to the chart, keep in mind we have a new Instagram channel, The Market Intel. You can find the link in the description. Check it out. Follow us there for additional updates and news. Let us take a look now at the PayPal chart. And I want to share with you the weekly chart first, the weekly time frame. And you can see that here on the larger time frame, we do have an initial 5-wave move up into the 2021 high. So overall, this is technically a bullish chart because we have a 5-wave move up here on our weekly time frame on the long-term chart. And we can also identify an ABC structure to the downside labeled wave 2, which we could say actually bottomed potentially even at $50 in October 2023. It's not entirely clear because we might see that one more low. We will talk about that in a minute on the smaller time frame. But overall, long term, the perspective is that the chart has a chance to rally in a third wave to, you could say, $677 plus. Now, those targets, they are really only mathematical projections at this point. I believe they are a bit too far out to really see them as targets. But technically speaking, if the next move up is really a third wave, this is where we should get to, $677, $749, maybe even $868. These are very, very common targets for a third wave to the upside. Now, if we see further upside from here, then long term also this key level here of 2021, the 2021 high around $310 could be an absolute key breakout point to the upside, an absolute key target that if broken could then unlock prices of $677 plus. But it means that there is a lot of work required here, and I think we need to take a look at the shorter time frame to understand if there is a chance that we've already bottomed in this wave 2, or do we get another low? Now let us take a look at the 4-hour time frame, because what you see here is that primarily, even though not with a very high probability, but primarily we expect this wave 2 to still be unfolding, potentially form one more low. We assign, however, a probability of 55%, so it's nearly 50-50. This is sometimes the case when there is not a lot of clarity. The idea is, though, that we should be, even if we get another low, that we should be very close to the end of a larger correction. At the moment, what we can say is that we are probably in the very late stages of this beige wave 2 that you see here on the chart, and we might see that one more low in wave 5, which might take us briefly below the $50 level, $50.18 to be exact. That's the October 2023 low. Now, if the low is already in and we assign this scenario a 45% likelihood, so it's not unlikely, then we should in the short term see the market break above $78.86. This should take the price higher, then potentially even towards $94, and a break above that $78.86 level would be a signal. We would then assign probably higher probabilities for an already unfolding breakout attempt to the upside. This would more clearly then indicate that this beige wave 2 has actually bottomed, specifically here in April. And this does look a little bit like a 5-wave move up, but I think one more high would give us an even clearer 5-wave move up, and a break above $78.86 would then, give us that clearer 5-wave move. Obviously, if we see that, and if we, get that rally and it's a 5-wave move, then we can always add the next support area to the chart in wave 2, which should then form a higher low, and then, we can watch for a reversal and the routine. So it's important to keep the alternative scenario alive, actually, from a really bullish point of view, that the April low is holding. So that's really a key level there. But overall, in both scenarios, we are still watching for higher prices, either very directly in the scenario in which the wave 2 already bottomed in April, but again, lower probability, but still, you could say, decent probabilities. Yeah, it's not unlikely. And if we get another low, then maybe there will be a brief break below $50 before we then recover back to the upside. So yeah, that's the update on PayPal. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure to register on our website, and you can also follow us on our new Instagram channel, The Market Intel. Thanks so much. Bye-bye.